Federal Reserve Board Chair Janet Yellen held off raising interest rates again, and a rate hike is not expected now until November or December at the earliest. Even as stocks hovered near all-time highs, Ms. Yellen cited uncertainty about the strength of the long economic expansion. After a two-day meeting, the Fed issued a press release assuring markets that its decision did not reflect concern that the economy was weakening, but rather they want to see more evidence of strength before hiking rates. A rate hike could come at the Fed's next meeting in November, but also could be postponed until December, or even delayed until 2017 if the data relied on by policymakers warrants it. Over her 21-month tenure, Ms. Yellen has often said Fed policy would be set based on economic data about to be rolled out. While you don't see it covered in the financial press, the speed and accuracy of economic data used by central bankers has improved in the last 2 decades. This progress may help to explain why the current expansion is one of the longest of the last century. In the past, most recessions started after central bankers read the data wrong and made a policy mistake. Most recently, Ms. Yellen has seen an assortment of good and not-so-good reports, what Forrest Gump might call a box of chocolates. The leading economic index declined in August by 0.2%, following a half-point jump in July, and a 0.2% increase in June. Despite this decline, the Conference Board, the source of the data, said the trend still points to moderate economic growth in the months ahead, although warned that some risks to growth persist. Housing starts declined in August by 5.8%, but looking at housing starts for the past year shows that this index can be volatile month to month, another mixed signal. Also adding some uncertainty is the presidential election. Republican nominee Donald Trump has said the Fed chair should be ashamed for keeping interest rates low for so long and said it was creating a false stock market. Some economists have predicted that a strong performance by Mr. Trump between now and the election could send jitters through the stock market. Share prices are still at an all-time high and fairly valued, and an emotional shift in sentiment or an unexpected event could cause a pullback at any time. But the long economic expansion that began in 2009 is continuing at a moderate pace, and the Fed is carefully monitoring the data that keeps it rolling along.